Hi, this is Rahul Sharma here from JM Financial. Welcome to the September edition of the Horizon Video Zine. Well, August was quite a lackluster month for most part of the market, but there were banks and financials which bore the brunt of the selling pressure. Bank Nifty saw itself correcting around 3000 points from the peak, whereas Nifty saw itself testing the floor of 19250 multiple times. Some of the stock ideas that we had recommended in the previous edition did well, while most of them remain sideways. Let's see what September has in store for us. Now, speaking of the global markets, we've seen the US markets do very well in July. In last few days, the pullback has ensured that there is a retest that is happening of the breakout that we saw a few weeks back. So if you look at the Dow Jones chart, we are retesting the breakout territory of 34,300, meaning there is a good possibility that if this area is sustained, we could very well see the Dow Jones heading higher. Well, as far as the European stock indices are concerned, Europe has gone from literally breaking out from this consolidation to falling back into the moving averages. So both the US markets and European markets, after having a breakout from their multi-week, multi-month consolidations, are literally seeing a retest of these breakout points. Now, what does this translate into the domestic markets? Now, as the previous month began, we had highlighted that there is a tipping point, meaning FIs have trimmed down their long positions significantly, and it is retail which has lapped onto the long positions. As you can see in the FI versus retail graph, the entire month was dominated by longs by retail, but it was FIs who've been holding these short positions. Now, going into the September month, if this thing continues, we could very well see the Nifty being under pressure. So for any sort of challenge to the bears or any sort of a reversal from this current consolidation, this relationship between FIs and retail has to show some signs of hope. Now coming to the Nifty graph. Now Nifty in the month of August has been trapping both bulls and bears on both sides. Now as you can see on the Nifty graph, there are multiple attempts to break out on the upper side. One around 19650 odd, second time around 19600 odd. Well, both the attempts were unsuccessful and we saw bulls getting trapped. Whereas on the downside as well, we saw the Nifty break the 19295 support area. 19250 was the second bottom that we made, and post that we made a bottom around the 19230 mark. Each time the Nifty rebounding back to its mean. Now, what this back and forth action has done is Nifty has spent a lot of time in this range. So the moment this range breakout happens, we can expect at least a 500 to 600 point kind of a move on an immediate basis. More often than not, such consolidations, such time corrections translate into continuation moves, which means the primary trend of the market, which has been up. So technically a continuation move should take us beyond the 20,000 mark. Now let us see what are the components or what are the key sectoral indices which can make this happen. Now the broader market, which is the Nifty 500 index, is as strong as ever. Now in fact there are bullish divergences on this Nifty 500 graph, meaning although Nifty created newer lows in August, but it was the Nifty 500 which has actually formed higher lows. This goes to show the strength of the broader market. The hot money generally which is there in the mid and small caps is still continuing to persist, and which is why we are seeing the broader market not giving up as much as a Nifty. In fact, mid caps and small caps have been very resilient. In fact, if you see the weekly charts of the mid and small cap indices, all of them are green all over the place. Now what does it mean? A lot of us have our portfolios in mid and small caps. In fact, a lot of retail clients, retail population participants in the market have their portfolios in mid and small caps. Well, if you're sitting on profits in anything in excess of 30-40% in the recent last 6 odd months, it is a good time to be taking profits and doing a sectoral shift. There are some sectors in the market where we feel whether it is a large cap, mid cap or a small cap, there is an alpha opportunity to be had. Now, coming to the banking index. Now the banking index is the one which was the first one to see weakness creeping in. In fact, Bank Nifty along with the Nifty had 4 consecutive weeks of negative closing, something which has happened for the first time since the COVID crisis hit us. Now, at least towards the end of August, there has been a bit of sigh of relief, and we've seen a bit of short covering come, a bit of attempt to rebound from this oversold territory. Now, still the hazy days are not over for the banking index, but at least the participants of Bank Nifty are showing some promise. So for example, private banks continue to be under pressure, but it is PSU banks which have held on to their strength. So if you see this Nifty PSU bank graph, in this entire correction, we've seen PSU banks holding on pretty well. And as we had highlighted in the previous views, that PSU banks, the rally has just started, and there is still a long way to go for the PSU rally to mature. So we feel this current consolidation time correction is a good opportunity, and the next leg of rally that begins from here, PSU banks should outperform the overall banking space. Coming to another sector where we have advised, where we do advise, continue to advise increasing your portfolio exposure, is the IT space. Now the IT index has been under pressure pain since 18 odd months now. This especially the last 6 odd months has seen base formation in large cap IT names. In fact, some of the mid cap IT names have already started rallying. The IT index is about to witness a breakout anytime soon, and when this happens, we feel the large cap IT should also participate. So we are advising our clients to increase the exposures in IT space and at the same time reduce their exposure in the banking space. Another sector, which is the PSE sector, is having the breakout of its lifetime. In fact, in January 23 this year, we had highlighted the decadal breakout that is taking shape in the PSE basket, PSE area. Now, this breakout has actually transformed a lot of these stocks, and we believe there is still a long way to go. So the PSE index continues to remain very strong, and any dips, any minor corrections over here would be good buying opportunities going into the rest of 2023. In fact, this is one sector there where we feel that there is a good possibility of an alpha creation. Now, in a market where broadly the market has done well, it is chemicals as a space which has been under pressure. So chemicals is something that we are adding into this month for investing. In fact, we are expecting a relief rally in the chemical space. This is not really a reversal as such, but a relief rally is very much on the cards. Chemicals as a space is a very wide one, and the number of stocks are humongous. So what we've done is we've technically chosen and nitpicked a set of stocks where we feel the technical health is relatively better, and where we feel in the next 6 to 12 months one can look to get around 15 to 20% kind of a return. These are the 7 stocks where we feel one can create a basket, one can create a mini portfolio and participate in this space. So the chemical basket is something that we've added in this month. In fact, the IT basket is something where we feel even if you don't have an exposure towards these mid or small cap IT names, this is the right time to do so. Anybody starting fresh can refer to our technical IT basket. Again, a list of 7 stocks comprising of large caps and upper mid caps where we feel the alpha opportunity is there. So we feel the markets in September should eventually see a breakout from the current consolidation, and this should eventually pave way for further upside for the Nifty index. As sectors, we continue to remain bullish on PSE, on IT, on metals, and we've added chemicals to that kitty in this month. We hope you have a profitable time ahead. Look forward to interacting with you on this platform next month. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.